Hola mi gente, welcome back to the channel. On today's video, we are going to do a deep dive in supply and demand zone trading. In this case, we are talking about stocks, but this can be applied to forex, to cryptos, to anything that has a marketplace. But we're going to dive into supply and demand strategies for beginners when it comes to stocks and the stock market. So hit that subscribe button, ring that bell, and smash that like button if you're all about making money in the stock market and you like this kind of content. In addition, if you're looking for a new brokerage, if you deposit $100 into Webull, you will get 6 free stocks valued up to $12,600. Webull does not charge any commission on stocks or options, has superb extended hours trading. You can start trading at 4 a.m. Eastern Time until 8 p.m. Eastern Time as well. You can do over-the-counter stocks. You can also trade crypto. Webull has a ton of things, and we have videos on Webull if that's of interest to you. And also, when you sign up, we are going to be rewarded by Webull, so it helps the channel grow as well. All right, let's get started. Let's talk about the law of supply and demand. This is the backbone of this strategy. And if you can understand this, then everything else is going to be a piece of cake. The law of demand. Let's get started by talking about the law of demand, shall we? So basically, the higher the price of anything, including stocks, the lower the demand. As valuations get stretched and a stock becomes more and more expensive, people are less likely to buy it, or at least that is how it should be. It doesn't always work out this way, but it always comes back to the law of supply and demand. There might be times where something might be too expensive and can continue to go up, but eventually it's going to revert back to where it should be and potentially even overshoot to the downside, because the stock market can be like a pendulum where you have swings that are extremely high valuations and then it can swing down to extremely undervalued. But the law of demand basically says that the higher the price of something is, the lower the demand for that product should be. This can be seen by the statement high price. This can be seen with this statement. The cure for high prices is high prices, because the higher something costs, the less likely people are willing to pay for it, and that is a demand destruction. So essentially, buyers want more of something the cheaper it is. The law of supply is the reverse of that. The law of supply states that the higher the price is, the higher the supply is. Because as things get more and more expensive, people or producers are going to want to produce more of it so that they can sell it and continue to get those high prices. Also, the higher the price is of something, let's talk about stocks for a second. The higher the price of a stock is, the more people are going to be selling that stock and locking in gains, and that's going to increase your overall supply of the amount of stocks that are available to trade. The law of supply, in a nutshell, says that sellers are going to want to sell the most of what they can at the highest prices possible. Now, the goal for supply and demand zones is very, very simple. We just want to follow the flow of money. We want to be on the same side of the trade as big institutions, as smart money, Wall Street hedge funds, big banks, asset managers. We want to be following what they're doing and not dumb money. The reason why this works and why these zones are created is because, let's say in a demand zone where a large institution wants to buy a certain security, they cannot complete that purchase order in one big chunk. It would increase the price of that security so quickly that it would look manipulated, and then also that big buyer won't be able to get the order filled at the price they want. So they have to do it in chunks. So that's going to create your demand zone. The same thing can be said in your supply zone. When they want to get out of a trade, they can't just sell it all at once, because that's going to dump the price and they're not going to get their sell order at the price they want. So they have to sell it in chunks for it to get filled and not drastically change the price of that security. That's going to create your supply zone. So what you will see is at these support and resistance lines, you will see in a certain time frame that multiple orders are being completed, and that's how you can identify that yes, there's a good chance that a large institution is starting to buy at this price or starting to sell at this price. And this happens all the time. Smart money or whales will buy low and sell high. Who are they selling to? They're selling to retail investors. They're people that do not realize that they are getting in at the wrong price. So how do we find supply and demand zones? Well, when we're looking for a demand zone, we're looking for areas of accumulation. We're looking for an area where they continue to add and buy. Demand zones also correspond to areas of support. So we can take a look at the charts, a technical analysis to identify at what price do buyers usually step in. That might be a demand zone, most likely it is. When looking for a supply zone, this is an area of distribution. This is an area where people are starting to sell, increasing supply. When you look at the charts to identify a supply zone, the first step is you need to identify a level of resistance based on technicals or maybe even on valuation. What's a point or a price where usually people start to sell? That's your supply zone. So if we look at this photo, it's really easy to understand now that we know the law of supply and demand. The first thing, if you look at that area of accumulation, that is your demand zone. People are starting to buy. It's going to then break out of that demand zone. It's going to trend upwards, and then it's going to hit the supply zone. Supply increases because whales, big institutions, smart money starts to dump their shares. They are distributing what they have. And that's why you're going to see multiple orders get filled. Those multiple orders is that little choppiness you see in that supply zone, which is your distribution. You're then going to see the stock drop. And then if they want to get back in, they are going to reaccumulate. They're going to increase their position in that demand zone. And then you could see another trend up and another distribution and supply zone. That's how this works. So essentially, your demand zone is going to correspond to a level of support, and you're going to see choppiness or some consolidation in that area to allow big buyers to accumulate their position. Then, at a level of resistance, you are going to hit that supply zone. They are going to distribute or sell their shares, and they're going to do this in multiple orders. And that's where you're going to get that consolidation, that choppiness until eventually they are out, and then wait for another time to get in at a better price. Now, there are two ways to trade this. You can either enter in as soon as that area of consolidation breaks, or you can be a little bit more conservative, increase your levels of probability, is that you can wait for that level to be retested. And then if you see a bounce off of that level, that is when you have an entry. And as shown in this photo, those levels of entry are going to correspond to when you actually see the bounce off of that support or resistance or supply and demand zone. Now, it's very hard to determine if something is continuing on a trend or reversing. Typically, most of the time, it's going to continue on trend because trend is trend for a reason. It's been doing it in the past, so the likelihood of it doing it in the future is high. A reversal is harder to trade, but it's going to be more lucrative because you're going to see bigger swings and you can ride that wave. A reversal is you getting in at the start of a new trend. So it can be very, very lucrative. So trading reversals is somewhat harder to identify, but the theory is the same. You're waiting for that area of consolidation. You're waiting for a rally or a drop in that stock, and then you're waiting for it to retest. And based on what it does after that testing will determine if it's a continuation of a trend or a reversal and help determine if you should go long or short a stock. So let's break down this chart. So the bottom, the green bars are our demand zones, and the red bar is our supply zone. So let's go over the first breakout, the first demand zone. As we take a look here, we can see that there's an area of consolidation. There are candlesticks, and each candlestick, the bottom of that wick is bouncing at the same price. Volume's a little bit lower. This is a good sign that somebody's accumulating shares at a certain price. We then wait for that breakout. We got that breakout and we saw a spike in volume. This is really good. This is a nice sign. That's when you want to enter into this trade. The stock kind of slows down a little bit, it enters into another level of consolidation. We wait to see what's going to happen. The stock can either break down or it can move higher. So we see that the stock broke out of that area of consolidation with relatively high volume and continued the trend higher. Then we get to a peak, it sells off quick. We have another level of consolidation, another area of accumulation, another another demand zone. Then we hit a technical pattern, a double top. This is an area of demand. We saw a massive sell off before we hit that area again, and then we saw it break down. It is at this demand zone that sellers are starting to unload their shares. So that's when you want to go short the stock. Saw a breakdown on relatively high volume, and now we are looking at something that is going to continue downward. We broke down all the way back to the initial demand zone. We saw it hit that price multiple times, and then we saw a massive breakout to the upside. That is when we entered into our trade, and as you can see, then the stock continued to go higher and higher and higher. This is using supply and demand zones to identify when to enter into a stock. We can also use these zones in the past to help us set alerts, identify price targets where we're willing to get into a particular stock. And we can also use these areas to determine when we should cut, when we should lock in our profits, or when we should go short a stock as well. So, in a nutshell, that's how you use supply and demand zones to help you be a better trader. You're basically looking for areas of support and resistance, but what makes supply and demand zones special is you're looking for that accumulation or distribution. You're looking for that consolidation around the support and resistance lines to identify that yes, people are loading up or people are starting to unload their shares. And that's going to help you determine what you should do with your trade. But remember, always wait for confirmation. Always wait for levels to be retested or you see a big breakout. Depends on how risky you want to be with your trades. But always, no matter what kind of level of risk you have, play it out. The riskier you are, the higher your returns might be. So you're able to take on more risk if you are right a couple of times with your trades. But always have a well-defined risk to reward ratio. Always plan out your trades. Know when you're going to cut losses and know when you're going to take profits based on technical analysis or some level of valuation, whether it's a metric like a price to earnings ratio or whatever it might be. But have reason behind your trades, plan it out, and have some form of risk management. So that pretty much wraps up for this video. I thank you so much for sticking around to the end. If you like this video, then please consider hitting that subscribe button, ringing that bell, and smashing that like button. In addition, join our private community by joining the Patreon listed down below. And if you sign up with Webull, deposit $100, you can get 6 free stocks valued up to $12,600 using the link down below. I thank you all for your time. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya.